which is going to cover the minimum bid rate, which is a rate decision for the Central Bank of Europe. And then at 3:30 also p.m. South African time, we have our weekly unemployment numbers coming out of the U.S. Looking at the markets right now, let's look at the euro. Euro is trading in this balance between this 110.15 level and 109.55 level, which is quite a tight range. I mean, we're only in about a 60 pip move for the past 2 weeks, and we've been trading between these two extremes, since the beginning of the month. So, we'd like to see it break out either on the upside or the downside. So, I mean, this has been a long time coming since it's been in such a tight range. If you look, previously to this, we haven't been in such a tight range for this extended period of time since January time. So, ultimately speaking, I'd like to see some sort of capitulation either on the upside or the downside, but some sort of breakout, okay? Some sort of either positive news or negative news, just to, make it justifiable to enter a position in the Euro USD. So it has been in a little bit tighter range. So what do we do when something is not trading as much? In one symbol, you go to another symbol. So let's look at the GBP USD. Big double bottom here, as you can see, and finally, I think what's found its bottom at 139. We're trading right above this threshold. It was a support threshold of 141.86. So this has been, on an upside scale. The question is it going to maintain its momentum? Is it going to find some sort of footing to go up higher? Okay, I'd like to see it trade in a range, okay, and have some sort of confirmation that we're trading in a range, okay, before I look to buy it on the upside. So, it has this rally, okay, so which we're looking at it right now. Question is it's going to hold this 141 level to go up higher to maybe 143 and trade within that range for some time. Time will tell. We'll have to look at it like that. Looking at the USD CAD, I mean, this was really a layup, and we've been talking about it for the past, past month and a half, 2 months. We had, let's just look on the weekly calendar first. We had this huge rally from 1 to 146, and then now we're having this retracement. And we had this retracement since the beginning of the year, really. This correction, I should rather call it. And we faltered from 146 to 132. So 140 pip move, on such a level of, this is not like a third world country, the CAD. So I mean, most of it is based on the value of the oil, because the Canadians are big exporters of oil. So the devaluation of the Canadian dollar over this time was the devaluation of really of what's been going to the commodity of oil. So as that is correcting itself, so is the currency. So we're really breaking new thresholds here, and we kept on. I mean, this is a weekly chart. So you look at the chart and you see red bar, red bar, red bar. So this is like 5 weeks, 6, 7 weeks of just red and retracement and a correction to the CAD. So that's how, that's, unless it's, there's no really place to buy it. That's basically what I'm saying. So generally, I don't like chasing something, okay? And after it breaks one threshold, you say, okay, it's not going to break here, so maybe I'll buy it. But it's like catching a falling knife, and ultimately, as traders, you really got to just play with the trend and trade with the trend, and the trend is your friend. So, at this level, 132.62, I don't want to say that we're hitting a bottom, obviously, because there's no justification for it, but it's still trading, and it's still trading on the downside. So every time it goes up, boom, it falls back down. And this is a nice indication of that. This is a 1 hour chart, and this is going back to just a week ago. And look at the opportunities you have to make money here. So every time it does bounce or it does go higher, it crashes. Every time it goes up, it crashes. But you got to be careful where your entry points are, because if you're chasing it too far, you could find yourself at the bottom of the move and then having it go, 100 pips against you, and you don't want to let it go that far against you. So USD CAD trading very well. Looking at gold now, gold retracing and correcting itself after hitting 1277. That's a huge move for gold. Okay, we hit 1279-ish level even, and then we corrected ourselves, and we're trading at 1246. Now this was previously a support level. Okay, this was previously a support level. If we look at a weekly chart, okay, we'll see that support, resistance, and then resistance here, even though we broke it above it, but we didn't close above it. Now we're right at that level right here at 1246. So we need to look if we're going to maintain it, or we're going to correct ourselves even further to take it further down. So that remains to be seen. Let's keep gold on the radar because it's been very strong and trading very well. Looking at the Dow Jones has been trading quite nicely. Actually, expiration is tomorrow, so you should be able to bring in your next contract, your next future contract for the Dow Jones. But as you can see, it's been trading close to 17,000 and really hovering right below it, flirting with this number. And I don't know if it has enough conviction to take it further. As you know, as you can see here, we had support level several times, 1, 2, 3, at this number 17,041-ish. And you can see that it's struggling here, trying to break up higher. So it's looking for some confirmation. It's looking for some positive news to take it up even higher. Looking at oil here, oil trading at $37.91, hit $38 a barrel yesterday. That's a big rally for the oil. But again, I'd like to see it close on top of it, maybe close closer to 39 to have some sort of conviction that it's going to go to 40. It's a big move since since the middle of last month we went from $26 a barrel to $37 a barrel. So it's a big rally for oil. This is Fred Razak at CM Trading. I want to wish you guys a great trading day. Thank you.